Are you struggling to add value to your multifamily investments? Most investors are because they don't know the right way to add value. Today, I'm going to fix that and show you how to unlock massive profits with your multifamily investments. Hello, everybody, and welcome back. I'm Paul Macaluso, the Multifamily Renegade. I've built a $6 million multifamily portfolio from scratch in under 6 years with no partners, no big inheritance, just smart, strategic, value-add multifamily investing. I know the ins and outs of taking an underperforming property and turning it into a high-yield investment. My goal is to show you exactly how to do the same thing. In this video, I'm breaking it all down. How to identify undervalued properties, pinpoint cost-effective renovations that maximize your returns, and use efficient property management to reduce overhead and boost income. With that said, let's dive into today's video. Okay, the first thing I want to go over is undervalued properties, what they are and why you want them. An undervalued multifamily property is simply a property that has low rents, deferred maintenance of some kind, and is run inefficiently by the current owner. I'm sure most of you are scratching your heads asking, why the hell would I want this type of property? Isn't the point of multifamily investing to find property, sit back, and collect good cash flow and not buy somebody else's headache? This is bullshit. I'm going to go back to watching cat videos now. Before you do that, let me explain. You're right, but you're only half right in your thinking. Look, don't get confused. I'm not saying just run out and buy any old piece of shit multifamily property someone has. What I am saying is you want to buy a property that has room for strategically adding value. Adding value is a delicate dance that must be done right. Otherwise, you can screw up yourself and investment and most likely go broke or end up in bankruptcy court. Adding value to a multifamily property is not like flipping a house. So for all of you guys out there watching who have flipped a couple of homes before, don't get ahead of yourself thinking you know exactly how to do this because you've done a couple renovations. You see, adding value or increasing the value of a multifamily property is not done purely by renovating like a single-family home property. The net income a multifamily property produces is what drives its value, not what your neighbor or surrounding properties have sold for, just like in single family. Let's talk a little bit about how to identify an ideal value-add multifamily property. There are going to be 3 key areas to look at when evaluating a value-add multifamily opportunity. Number 1 is rents. This is the first thing you want to look at and the most obvious one because, again, the value of a multifamily property is driven by the net operating income it produces, and rents are what is producing the revenue to begin with. You want to compare rents to an area average. Look for properties where rents are 20% or more below market value. Typically, when you find a property with in-place rents that are 20% or more below market, you're going to find the other 2 value-add components as well. Very rarely will you find a multifamily property with only one of the 3 value-add components. Number 2, deferred maintenance. Now, deferred maintenance can come in many shapes and sizes. This can be a little tricky because some deferred maintenance can lead to bigger problems. You may not want that can actually blow up the deal altogether or just turn things into a money pit that you can't get any profitability out of. Cosmetic issues like peeling paint or outdated interiors signal opportunity. Now, number 3 is operational inefficiencies. High expenses, poor management, or high vacancies are red flags, but opportunities. You want to be able to find these types of properties as off-market deals and use strategies like direct mail campaigns, networking, or cold calling to find these types of deals. Let's switch gears and talk about cost-effective renovations. When you're renovating a multifamily property, you always want to keep the rents in mind with anything you're considering doing. Not all renovations are going to increase rents, and higher rents are what we're after. You have to weigh every renovation against what you believe rents can be increased to so you know you are getting the biggest bang for your buck. So number 1 thing you can do is increase its curb appeal. I'm sure you've heard this before, but you only get one shot at making your first impression, and your curb appeal is your property's first impression. Invest in exterior paint, getting rid of old rotten fascia boards, low maintenance, clean landscaping, and potential signage. These are all things you can do that have a big impact. Number 2, interior unit upgrades. Focus on kitchens and bathrooms, replace fixtures and appliances strategically. Don't just go hog wild and start doing crazy stuff. Don't go overboard and put high-end fancy finishes. You do not want to do this. I see tons of people do this. You need durable, clean, modern stuff that has a broad appeal that won't break the bank. Number 3 is energy efficiency. Anything that's going to save you on operating costs is a good idea when renovating. Look, dual pane windows, LED lighting, and low flow fixtures are all items that have cost saving benefits to your operations. Okay, let's talk a little bit about strategic property management. Having strategic property management, either from a third-party company or yourself, will allow you to have your multifamily property investment ran smoothly. You don't want to spend your time finding a property, investing your time and money into it, only to fall short with your goal of having it produce the type of income you need to increase the value. So, expense optimization needs to be looked at before and after you close the property. Review vendor contracts that may have been in place. Can they be renegotiated or flat out eliminated altogether? Are there certain utility bills that are higher than they should be? Can you reduce the cost of these by specific renovations or addressing deferred maintenance? Reducing operating costs increase your net income, which is what the value add for multifamily is all about. Now, I want to give you guys a quick story. One time I bought a property and I noticed that the water bills when I purchased the property, while I was in my due diligence, I got copies of the utility bills. I looked at them like, Jesus Christ, this water bill is insane. The water bill was almost $1,000. Actually, I think some months it was over $1,000. So when I got in there and I started taking care of all of the deferred maintenance, I was able to actually reduce that water bill down to about $100 on average per month. So just by addressing deferred maintenance, which was leaky toilets, leaky faucets, dripping angle stops, things of that nature, I was able to significantly cut the cost of the water bill, which put that money back towards the bottom line of the property. Tenant retention is your path to a stabilized asset. Not a lot of people actually focus on this when they should be focusing on it. A focus on proactive maintenance and communication with your tenants helps build trust and rapport, which makes people want to actually continue to live in your properties. Now, I've known people to own properties where they'll have tenants come in and report a maintenance issue and they never address it. And then people complain about their neighbors or whatever it is. Tenants communicate issues with the property, but the management or owner don't do anything about it. And this basically makes the tenant feel like they've been neglected. They just put up with stuff. You know, it's not right to have people just put up with things. Now, if you keep that type of environment and you want to try to start raising rents, you're going to receive resistance from those people. You know, sometimes people that are renting a place, they'll make a trade-off to say, okay, well, my rent's pretty low. I guess this is the type of shit that I got to put up with because my rent's low. But if you start inching that rent up and you're not addressing tenant concerns, I guarantee you'll see these people leave quick, fast, and in a hurry. Ancillary income is another way you can boost the bottom line of your property without doing very much. This can be done by adding revenue streams like laundry machines, vending machines, reserved parking on the property. These are all little minor things that you can do to generate more revenue for the property without having to do any real kind of work. Now, not every property can accommodate this, but always keep an eye out for ways that this can be done with your investments. Streamlining your operations has never been easier. We live in a technological age that makes what used to be difficult or cumbersome significantly easier. Leveraging property management software to reduce overhead and embrace new technology like AI to stay ahead of the game. This is all going to streamline your operations for you. Okay, guys, we covered a lot today. Now you have a much better understanding of what makes an undervalued property and how to exploit this correctly to add value the right way. I've explained to you how you can focus on cost-effective renovations that are going to maximize your return on investment. and I gave you insights into how to use strategic property management to optimize operations and increase your revenue. Okay guys, that's going to do it for today's video. If you liked this video, found value in what I shared, but have not already subscribed to my channel, please make sure to do so before leaving. I do my best to drop 2 videos per week for you guys, so make sure to hit that notification bell so you get notified each time a new video drops. Hey, if you liked what I had to share and you feel like you got a comment for me, please leave it below. Let me know what you thought about today's video, or if you have any questions about adding value to a multifamily property. Thanks for watching guys, and I'll catch you in the next video.